Hi everyone, in today's class I am going to work out another problem in not-for-profit organization. Let me read out the problem and then explain and work it out. What is given in the problem is they have given us the receipts and payments account of Delhi Literary Club for the year ending 31st March 2019. The receipts and payments account starts with opening cash in hand and ends with closing cash in hand. Below the opening cash in hand in the receipt side, they have given all the receipts. There are two types. One is capital receipt and the another is revenue receipts. We should identify all the revenue receipts and they will be shown in the income side. And more particular, current year amount only will be shown in the income side of income and expenditure account. All the capital receipts will have to be either shown in the liability side or sometimes will have to be subtracted from the assets. Will have to be subtracted from the respective assets in the asset side of balance sheet. Because sale of an asset also is a capital receipt. Below the cash in hand, they have given entrance fees. Entrance fee is collected from every new member joining the club. In order to meet the admission expenses, this should be treated as an income. Then subscriptions. Amount is 46,000. If no other related particulars given in the additional information, we can consider that this is the actual income of that year. If any additional information given related to subscription, then we should adjust with this amount in order to arrive at the actual income of the particular year for which we are working out. Then life membership fees. Life membership fee is the lump sum amount received from the new members joining the club. Since the amount is collected only one time, this should be treated as liability and should be shown in the current year balance sheet. Liability side of the current year balance sheet, amount is 2,500. Next, interest received on fixed deposit. Interest received on fixed deposit is the income. This should be shown in the income side of income and expenditure account. Then finally they have given sale of furniture on 1/4. In the commencement of the financial year, the club has sold 25,000 worth of, within bracket they have given on 1/4/2018, book value 25,000. See, as per the balance sheet, the value of furniture which was sold is 25,000, is worth of 25,000, whereas the club has sold it for 22,500 only. So we should calculate the profit or loss incurred in the particular sale. Here the club has incurred 2,500 rupees loss. 25,000 minus 22,500, because sale value is only 22,500. So the club has incurred 2,500 rupees loss. Any loss should be shown in the expenditure side by using the rule debit all expenses and losses. Then the book value of furniture must be subtracted from the respective furniture amount. Here you have to understand one thing. Capital receipt will either increase the liability or decrease in the value of fixed asset. Here you can see life membership fee will be shown as the liability and it will increase the value of liability. Whereas sale of furniture also is a capital receipt. At the same time, this will appear in the asset side by subtracting from the respective value of furniture. If we come to the payment side, rents and rates. Rents and rates are the expenses. Expenses, this should be shown in the expenditure side of income and expenditure account. Lecture fee too is an expenditure. Sundry expenses, this must be shown in the expenditure side. Then fixed asset. Fixed asset in the payment side means purchase of fixed asset. This will appear in the balance sheet, asset side of the balance sheet. And closing cash in hand also is an asset, current year asset. Opening cash in hand is the previous year asset. Previous year asset or opening asset. Below the receipts and payments account, they have given us additional information. At the beginning of the year, the club possessed books worth rupees 20,000. Possessed books means the club owns 20,000 worth of books in the beginning of the year. and furniture worth 40,000. If we need to prepare opening balance sheet, then we'll have to use this amount. Further, this will appear in the current year balance sheet too, after adjusting any other receipts or payments related to the particular assets. Either additional purchase or sometimes we would have sold some existing asset. We should adjust them, then we can show the final net value in the outer column of the current year balance sheet. Subscription received in advance during the current year amounted to rupees 1000. This should be adjusted. Received in advance during the current year means during this year we have received. Subscription in advance means this is for the next or subsequent period. This amount must be subtracted from the subscription received during the year. Then the net value only should be shown in the income side. 46,000 minus 1000. We should show only 45,000. The advance subscription is the current year liability. Finally, they have asked us to prepare income and expenditure account of the club for the year ending 31st March 2019 and the balance sheet as on the date. Further, here we have to understand one thing. Capital fund is not given. We have to consider all the opening values. We have to consider all the opening values in order to find out the capital fund. Then only we can proceed further to the current year balance sheet. Let us see how to solve this problem now. Now we are going to prepare income and expenditure account and balance sheet of Delhi Literary Club for the year ending 31st March 2019. First, we are going to prepare income and expenditure account. Income and expenditure account is a ledger account. In the left top corner, this side is debit side, right side is credit side. Left top corner, we should write DR for debit. In the right top corner, we should write CR for credit. This side, we are going to record all the expenditure and losses by using the rule debit all expenses and losses. In the credit side, we are going to record all the incomes and gains by using the rule credit all incomes and gains. Right? This side is expenditure side. Right hand side is called credit side. First, we should see what are the expenditure, what are the expenses to be recorded in the debit side of receipts and payments account. Debit side of expenditure account. Debit side of income and expenditure account. First, they have given rent and rates. Rent and rates is a recurring expenses. Whatever is recurring in nature or the life of expenses will be over within the particular financial year. Then we can consider that as recurring. Recurring means the same expenditure will incur again and again in the organization or periodically. Rent and rates, what is given is 21,000. 21,000, this is a recurring expenditure. Then lecture fees. Lecture fee 4,500. Since this is a literary club, literary means for study or writing, right? This kind of activity will be taking place there, knowledge oriented, mostly writings. Lecture fee 4,500. Then sundry expenses, this also is an expenditure. It should be shown in the expenditure side, 7,200. Then fixed deposit. Fixed deposit is an asset. Fixed deposit is an asset. This will not affect the income and expenditure account. It should be shown in the balance sheet. Then finally, in the payment side, they have given cash in hand. Cash in hand too is an asset. It should be shown in the current year balance sheet. Closing cash in hand or cash at bank is the current year asset. It must be shown in the current year balance sheet. If we come to the receipt side, we should see what are the recurring incomes or recurring receipts. Only the recurring receipts for the current year value should be shown in the income side of income and expenditure account. First, they have given cash in hand. Cash in hand, opening cash in hand will not affect any account. Income and expenditure or current year balance sheet. This will be used only for preparing capital fund or by preparing the opening balance sheet. We can calculate the capital fund by preparing the opening balance sheet. There only we will have to use this money, use this amount. Then they have given entrance fees. Entrance fee is a recurring income. Recurring income, every club will collect entrance fee from every new member joining the club. It is in order to meet out the admission expenses. This is the income. This is the income. 2,300. Then subscription 46,000. Whenever we record transactions in the expenditure side or income side, we should see whether there is any additional information related to the transactions we are recording in the accounts. If there is any additional information, then we should see whether we are going to add with the particular amount a particular transaction or subtract from the particular transaction, a particular amount. Then we should write the amount in the inner column. When you go through the problem before working out, you should make a note of it. You should identify them. Subscription, there is an additional information related to subscription. Then we should write the amount in the inner column. 46,000. Subscription is 46,000. In the additional information they have given subscription received in advance during the current year. During the current financial year, the club has received advance subscription. Advance means which is for the future period. The amount is for the future period. We are going to record only the current year expenses and current year income. We are going to match the current year expenses with the current year income. And we are going to find out whether there is any surplus or deficit. In order to arrive at the current year income, we have to subtract the advance subscription which is for the future period or subsequent period. They have given 1,000 rupees. If you subtract 1,000 rupees from 46,000, you will get 45,000. This is the actual income of the current financial year. Then, life membership fee is a lump sum amount, as I already explained. It is a lump sum amount received from each member joining the club. Only one time receipt. This will be treated as liability. Interest received on fixed deposit. Interest on FD is an income. Interest on FD is an income. This is a recurring income, 500 rupees. Then they have given sale of furniture within bracket 1/4/2018, book value 25,000. There itself they have mentioned what is the book value of the furniture. Whereas the amount collected by selling the furniture is 22,500. 25,000 book value of furniture is sold for 22,500. See, here we should see how much is the profit or loss. See, they have incurred some loss here. Loss on sale of furniture. Whenever assets are sold, the profit or loss incurred in the particular transaction, financial transaction, should be shown in the expenditure or income side according to the nature. If it is any profit on sale, it should be credited in the particular financial year. If there is any loss on sale, it should be debited in the particular financial year. Loss on sale of furniture. 25,000 is the book value, whereas the club has sold it for 22,500 only. So 25 minus 22,500, 2,500 is the loss. By using the rule debit all expenses and losses, we record all the expenses and the losses in the debit side by using the nominal account rule. So this is the loss. 2,500 is the loss. We should verify whether we have shown all the details related to expenses and income before closing the account in the income and expenditure account. Right? Now everything is included or shown in the income and expenditure account. We should roughly see in which side the total amount is high. Here, just by seeing subscription 45,000, no other value is equal to that. Even if you add, you cannot get that amount. So we can understand simply that the credit side amount is high, total is high. If you add that amounts 47,800 you will get. Write the same amount in the opposite side on the same line, 47,800. Then we should subtract all these values from the total 47,800. So the balance we are getting, if you subtract these values, you will get 12,600. Here we have to understand, if you get balance in the debit side, it should be called as surplus because income is more, so that you are getting the balance here. Income is more than the expenses. Income is more than the expenses. That is why you are getting balance in the debit side. This is called surplus. Excess of income over expenditure. Excess of income over expenditure. This amount is 12,600. Then we can go for preparing balance sheet for the current year. As they have not given capital fund in this problem, when you go through the problem, you should see what are the working notes. This is not a balance sheet for the current year. This is a working note. As they have not given the capital fund, we are preparing the opening balance sheet. We are preparing the opening balance sheet or previous year closing balance sheet in order to calculate the capital fund. All the values related to 31st 3 should be considered in order to prepare the closing balance sheet or current year opening balance sheet. 31 3 or 1 4. No other change in the accounts in the balance sheet except the date, right? Balance sheet is a statement. That is why we used to write always balance sheet as on 31st 3 2018. In the left hand side, we are going to record all the liabilities. In the right hand side, we are going to record all the assets. Here, first, in the receipts and payments account, opening cash in hand they have given. Opening cash in hand is the previous year asset. Opening cash in hand is the previous year asset. If you prepare previous year balance sheet or current year opening balance sheet, we should use the amount. Otherwise, there is no need to use this money, this cash in hand or cash at bank in any place of the current year final accounts, which means current year income and expenditure and balance sheet for the current year. Cash in hand 3,200. Then at the beginning of the year, the club possessed books worth rupees 20,000. They have clearly mentioned at the beginning of the year. That means previous year. At the beginning, 31st 3 or 1 4. Books worth rupees 20,000 was available in the club. Then furniture worth 40,000. These two assets were there in the club. Furniture 40,000. No other values are there to reflect in the previous year balance sheet. You don't get confused by seeing the sale of furniture on 1/4. Here this value 1/4 means you should not consider that this is the previous year value. On 1/4 they have sold. On 1/4 they have sold. 31st 3 2019 they have given the receipts and payments account. In the receipt side, the last transaction is sale of furniture on 1/4 means this is not the opening, right? This is not transferred from the previous year value. They have sold this on 1/4 2019. And by selling the furniture, they have collected 22,500. You don't get confused. Out of this value, the immediate next day, the club has sold out of this furniture. The immediate next day, that means next financial year, the club has sold 25,000 worth of furniture for 22,500. This will not affect the opening balance sheet or previous year closing balance sheet. You have to understand this. Then if you balance this account, you will get the capital fund or general fund. Here the total is high, 63,200. Write the same total on the same line in the opposite side, left hand side, liability side. Then nothing is here to subtract. No amount is to subtract. Then the entire amount will be the balance, and this would be called as capital fund is the balancing figure. Now we are going to prepare balance sheet. After preparing the income and expenditure account, we prepared the balance sheet for previous year in order to calculate the capital fund. After finding out the capital fund, calculation of capital fund or finding out the capital fund is a working note. Just for calculating the capital fund, we worked out the previous year balance sheet. And after finding out, we are going to prepare the balance sheet for current year. Balance sheet as on 31st March 2019. We should see what are the assets and liabilities available in the club on 31st March 2019. We should see both receipts and payment side in order to know the values of assets and liabilities incurred during the year. And from additional information, we can know the previous year assets available in the organization. First, we can know from the receipts and payments account. In the receipt side, opening cash in hand will not affect the current year balance sheet. Life membership fee, entrance fee is the income, subscription is the income, life membership fee is the liability. Life membership fee is a liability. This is a one-time receipt. received from each member joining the club. Life membership fee is a liability. Interest received, sale of furniture. Sale of furniture is given when we write the value, we should subtract the book value of furniture. We should subtract the book value of furniture. Because in the balance sheet, only the book value should be subtracted. The profit or loss incurred by the sale of asset should be shown in the income and expenditure account according to the nature of transactions. If it is profit, it should be shown in the income side. When there is loss, it should be shown in the expenditure side. Here, the club possessed books worth rupees 20,000. Books worth 20,000, there is no change. Additional purchase or sale of any book has not happened in the club. Furniture worth 40,000. We cannot write the value in the outer column because they have sold during the year 25,000 worth of furniture. So, sale of furniture which is worth of 25,000 must be subtracted from 40,000. Only the balance amount should be written in the net value should be written in the outer column. After selling 25,000, the club has 15,000 worth of furniture. Then cash in hand. If you come to payment side, rent and rates, lecture fee, sundry expenses, everything is expenditure. Fixed deposit 40,000. Fixed deposit 40,000. Then cash in hand 4,300. Closing cash in hand is the current year asset. So we are recording in the asset side. Then we should see the additional information. Already we have written books and furniture. Subscription received in advance. Subscription received in advance is a liability. Subscription received in advance is a liability until the due date arrives or until the next financial year commences, for which period the club has received the money. Until the date arrives, it should be treated as liability. Then, by working out the previous year balance sheet, we have found the capital fund or general fund. That amount should be taken here. Capital fund 63,200. Then we should add the surplus. 12,600 is the surplus we calculated from the current year income and expenditure account. When there is surplus, it must be added. When there is surplus, it must be added. If there is any deficit, it should be subtracted. Here there is a surplus. It should be added with the current year capital fund 75,800. Before closing the account, we should verify whether we have shown all the details in the assets and liabilities side. Now we are going to total both the sides. If we get equal amount, then we can understand that the balance sheet is correct. The total is 79,300. The same total we are getting in the asset side too. I hope that you all would have understood this clearly. If you like this video, kindly subscribe and share this video to your friends and relatives. And turn on the bell notification, then only you'll get notified whenever I put videos. See you in the next class.